Alright guys, welcome back to TETrading and another YouTube video. Bit different this time. I'm actually going to open myself up and show you with complete transparency my stocks and shares portfolio. So I'm a stock market investor as well as a Forex trader. And Forex trading I've only been doing for, well, a year and a half demo and started to go in live now. So stock market investing I've been doing for probably a similar amount of time, but actually jumped in real money straight away because in my eyes it's probably a little bit more secure, a little safer. So today I'm going to show you my portfolio, as you can see on the screen here, and I'm going to run you through some of my favorite stocks. It'll be a real quick video, just a few of my favorite stocks and kind of why they're my favorite stocks. I'm typically a dividend investor to get the monthly income. But I have been in a few growth stocks more recently, which you can probably already spot on the screen, but I'll run you through them anyway. So first of my favourite stocks, two of my favourite stocks are still in the red. AGNC is one of my favourites, and I'll explain why. Payout ratio is just under 72%, so it's okay. Dividend yield is 11.11 as of right now, and was at least 11% when I got into it, and it's a monthly payer. So they're going to pay me, and they do pay me, every single month, around the middle of the month. So since I've been in them, I've had a payment every single month, which is fantastic. So I don't have to wait quarterly for a payment. Not sure when the quarterly payment's going to come round or what round it's in. It's monthly payments every single month, and they pay me every single month, which is amazing. So they're my favourite, one of my favourite stocks. I got in way back here actually. So this was last year before the world going mad and everything that's going on now. And then it grew slightly, which was lovely. I actually loaded up on some more when they were down here. Was never going to take full advantage of it. For me, it's not a growth stock, it's a monthly payer, it's dividend stock. I'll just hold that probably forever and probably keep adding to it over the years. So number two, again, similar situation, not necessarily a growth stock. For me, a dividend stock, a buy and hold forever. It's been paying, it's increased its dividend yield for the last 35 years. You all know AT&T. You all probably know of Verizon as well, similar stock. You may well be in AT&T, you may be in Verizon, you may be in both, but if you're not, I would highly recommend it. Brilliant stock to be in. 65% payout ratio, so pretty healthy. 6.82% yield as of now, or certainly half an hour ago when I looked. And as I said, been growing their dividends for the last 35 years. So just such a solid stock to be owning for the long term, along with a lot of others that you've probably heard, Verizon, ExxonMobil, McDonald's, Coca-Cola, all of those. So AT&T, I hold quite a lot of shares in AT&T at the moment because they're such a good solid stock. So market value is $3,270 odd, which will be about 2,700 pounds, UK pounds, I would have thought, around that. So that's number two, brilliant stock. Buy and hold it forever, just superb. Never going to falter. Probably will never falter. The next few are actually not dividend payers, or one of them is, but no, two of them are, but they're just growth stocks and kind of speculative buys, probably. So Caesars Entertainment is one of them. Big player in Vegas. Vegas closes down, shares plummet. Such a big corporation. I'm pretty positive that it's going to weather the storm and will come out the other end. So far has proved me right. Doesn't pay a dividend yield. I will be looking to scale out of this as soon as it gets up to maybe or close to new highs maybe. But as it is, that's kind of creeping back up. Nice V-shaped recovery everyone's been going on about. Is it going to come back down again? Maybe. But as of right now, I'm going to hang on to Caesars Entertainment. Similarly, Wynn Resorts. So Win Resource do pay a dividend. They pay a 4.19% dividend. So I may well hold on to these actually, but similar situation, not quite the recovery we saw with Caesars, but it's on its way back up. Win has always been regarded a fantastic stock to own anyway, because it's a dividend payer. It's a solid company. I'll hold on to those at least until we get up to, again, new highs. But it's a dividend payer, so I may hold on to it because I'm a dividend investor, and I'll just keep taking those quarterly payments. So that's another one that was kind of speculative in a way, because it was the hospitality sector. Nobody really knew what was going on. So third one that's kind of hospitality, I guess, and travel, really, leisure travel. Carnival. A lot of talk about Carnival, CCL, and how it going to go bankrupt because its business just shut down overnight. You can see the screen there. Massive movements, serious fear. I didn't put a lot into this. I just threw a bit of money in and thought, hey, what's the worst that can happen? And if we do get to see it bounce back up to, it won't be new highs in the next few years, certainly. I wouldn't have thought. But even if we get back up to kind of the $30 level, I can double my money and then probably just sneak out of it. Although I probably won't sneak out again because it's a dividend payer, so I may well hold on to it. I'll see how it goes. I've not made my mind up, but it's a serious dividend yield as well, at just shy of 10%. So as of right now, so I may well hold on to that one. But these were real speculative plays, not what I normally do. I'm normally a long-term dividend investor, hence why I've got Vanguard ETFs and quite a lot of money in those. I've got a REIT ETF, ExxonMobil, Procter & Gamble, Boeing, and things like that. So Vodafone, AT&T, Legal & General, Pfizer. These are all, they're getting just kind of buy and hold forever dividend payers. Those ones were more speculative. There's been a massive dip. Let's see if these rise. So another two that are exactly the same, and I'm going to go straight to the top of my portfolio here. If you have a look at the screen, we've got a 133 and 130% growth in both these. I'll show you them both because they just look fantastic. I love looking at these charts. Look at that. I'm very pleased with that. I don't know, could I have got in at a better place? Absolutely, but no one's getting in there, surely. So, good play there. Did I know it was at the bottom? Absolutely not. Did anyone know it was at the bottom? Absolutely not. Bit of luck, but with the likes of Snap, Facebook, probably Apple to a degree, Netflix, these are online companies that people are going to be using and will continue to work in the situation we're in when people are home and in lockdown. They don't need physically people going into stores and things. A lot of it's online streaming, Netflix, things like that. So I was like, let's get into a few of these and see what happens. And these two so far are my best performers. At the same time, I got into Facebook, Netflix, Apple, and Disney. Disney being a fantastic company anyway, but they launched their streaming service. So these ones just happen to be the top performers. So Shopify, online business model, again online shopping, just absolutely rocketed. I mean, we had lower lows back in late part of 2019 anyway, but it dipped. It was always going to be a good play in this environment, and it's done very well for me. So neither of which are dividend payers. I will look to scale out, not Shopify because I think I'm one share in that, but I will look to scale out a Snap potentially as it doesn't pay a dividend and reinvest that back into something that does pay a dividend. So those are, I'll throw one in extra actually, another one I like, and for obvious reasons, Zoom. I mean, everyone's using Zoom now. I could have got in better maybe, but I knew it was always going to grow, and the way the world's going, everyone's working from home. I've got a new, you can't see it, but I've got a new office set up, a new swanky office chair, everyone's going to be working from home. There's potential I might end up working from home. So Zoom we use on a daily basis now, whereas we didn't before, and that's why the share price has gone up. So that I'm just going to hold. I've only got one in there. I'm just going to hold that for pretty much forever. Doesn't pay a dividend, again, growth stock, but has performed really well for me so far. So we are at, where is it? Oh, it's at the top. 81%, which is fantastic. So that's just a quick, brief overview of my portfolio. I'll probably do one of these every fortnight to maybe once a month, just to give you an overview, and I'll probably run you through my dividend payments as well, and exactly what's going on there. So I started investing back in sort of November, December, bit of October, and that's what the dividend payments have been doing so far as well. So a nice steady increase. So I'll run you through these every fortnight or maybe monthly. I'll do an overview of the portfolio, just as something a little bit different. Put in the comments below what you want to see, anything that you're interested in, anything you're getting into yourself, and in the meantime, keep investing, keep trading, and I'll see you soon.